Josh and Brian here with the Lenhart team, Cold Bank Realty. We're a team out of Minnesota, team of 9, and do about 150 transactions a year. And we are going to give kind of some seller tips when purchasing, things to do.
When you go to buy a home and you have a home to sell, what options do you have?
Bridge
Do I
loan.
have to sell my house first in order to buy something?
Right. Talk to your lender, figure that part of it out. Can I afford both? If I can, where's my down payment going to come from? That would be a bridge loan along those lines. Or you put your house on the market and sell it contingent. We've talked many times about the investing, the rental part of it, rent your house out, claim some of that rental income as, to help you with the next property and offset your DTI on that house. Another option could be is sell, investing, do contract for deed option, sell your house on a contract for deed. And, there are some gray area on there with every mortgage in Minnesota has a due on sale clause. How often does your mortgage company call you? Is the line.
Josh, you are borderline confusing me. There is no way anybody knows what you're talking about. So much. One, right? If you buy a house, if you have a house to sell, you can purchase a house contingent on you selling a house.
Correct.
So then if you sell your house, you don't have to buy that house until you sell your house. In Minnesota, know that that is the one contract that can be bumped. So you can be bumped out of that,
Yes.
right? You could sell your house contingent upon you finding something. So if you accept an offer, you can get yourself 30 days, typically if the buyer is okay with that, to find something, and then you can extend or cancel during that time period. And then the third probably way is to be able to do is, can you afford both, right? If you can hold both mortgages, ask your lender if that's a possibility for you, then you have a little bit more flexibility. You could buy the house currently now, and you could probably push that closing date out to 60 days.
Yep.
And in those 60 days, list your house during that time period, sometimes be able to match up the closing date or overlap a little bit.
Right.
On it.
If not, it allows the overlap so you can,
Yep.
slowly move into the next.
And then the other thing that happens during that process too, if you do close after the purchase of that other home, you can then take those funds typically, right, and recast your loan is what it's called, right? So take them back and put them into the other property and they'll recast it, which is similar to refinance, just a lot cheaper, right?
Yeah, it actually doesn't cost you anything to recast. It will, your interest rate stays the same.
Yep.
Your term changes the same, but they will adjust your payment based off from what you're putting down. Generally, you got to put 20 grand or more down. And I believe you're only allowed to do it once, but I think there might be other instances you could do it another time if you had, came into the Mega Millions and wanted to put it down.
Recast.
So
those are 3 or 4 options for sellers when they have a house to sell and they're purchasing something.